last thing I fucking want to go do is like back to my Houston job in a cubicle, like out there.
It's just you out here, and you've been able to bring in, $100 million worth of volume here in Houston.
I also want to give a quick no and not waste anybody's time. Don't want to waste appraisal money. I absolutely will pass on a deal if I know the value's not going to hit, or if the DSCR is not going to work, or if there's something about it. I'll say, you know what? Here's how it works with us.
And in order to scale quickly in real estate, you need to have speed and convenience, right? Like, how can I get out of this?
Yeah, do you want to do this? I was like, of course. He was like, you don't have to go get a license. He's like, he's like, this is, full commission sales. Like, if you want to do it, you're not getting a good paycheck unless you close stuff, right? One of those things. And so I was like, hell yeah, I'll take it.
Welcome to another episode of Pick Up the Phone podcast. I am your host, Josue Llanas. I am the founder of GetsYou.ai, the only production voice AI with emotion detection. It's not artificial intelligence, it's emotional intelligence. Today's guest is Andrew Faught. Andrew Faught is one of the top 5 lenders in Houston, top 1 or 2 in the States. He's close to over $100 million of volume in Houston alone. And I think one very important distinction about Andrew is that he can do 1 to 4, but more importantly, 5+ multifamily for DSCR loans. So I think that really sets you apart, bro. Thank you for being here.
Absolutely. Thanks for having me.
Absolutely.
It's a little surreal being here. I've been watching the podcast for a while, man. It's really taken off, man. I appreciate the invite.
Dude, I'm so happy to be here, bro.
I know it took me a minute to get here. I was like, I don't know if I want to do it, but no, man. Thanks so much for having me, man.
Absolutely, bro. Absolutely. So happy to be here, man. So, dude, let's jump right in, dude. Who is Andrew Faught? What do you do for people? We've done some deals together in the past, so it's kind of like a full circle moment here, bro.
Well, I guess I'll take it back. I'm from here. I'm from Waller, actually. So it's my backyard. Yeah. Born and raised. High school here. Went to Sam Houston. Went to college here. Bounced around a little bit. Well, I didn't bounce around. Like after graduating high school, I actually was in the oil and gas industry for a while. Oh yeah. Not really knowing what else to do. From Houston, you kind of just are told, you want to make some money, you go into oil and gas. It's kind of all I ever knew.
What you doing in oil and gas?
A bunch of different things. It took me a while to figure out that it wasn't a fit. So I was in oil and gas for about 8 years. Had I think 3 or 4 different companies, kept jumping around, like trying to find the perfect fit. And then finally realized, hey, it's probably me. Yeah. It's probably not all these different companies, it's probably me. But it was a really cool, it was looking back, it was a really good experience. Got to live in, different places in the US. Actually got to live in South Korea for a year. Nice. As an expat, which was an incredible experience. But, I always wanted more, for myself, and always was ambitious, but didn't know what to do. Kind of back in those days, real estate wasn't really talked about as much as it was today. So
right.
I remember when I was in college, I worked at Gold's Gym in College Station, and a member came in. I sold memberships and stuff, right? And as a real estate investor, he came in and I got to know him, sold him a membership or whatever. And he was like, yeah, I own a bunch of homes or whatever. So I was like, oh, that's really cool. Never heard that. So it's funny, looking back, that planted the seed of, the possibility, I guess, of being an investor, being the real estate investment space. And, and that was 10 years prior before I actually got into it. But it probably got, was my first thought of oh, that would be something cool. And I found out about it, I guess. Yeah. But, and so, going through, we lived in Korea. I proposed to my wife super quick when we lived in Houston.
Really?
Before they as soon as they offered the South Korea gig, they're like, hey, well, if you want to bring anybody or want to bring your girlfriend, got to show us a marriage license so that she can be included. So like proposed to my wife, my girlfriend at the time, and we went to.
How long were you guys dating?
It was 6 months.
Nice.
I mean, it wasn't like super short, but it wasn't, and so
when you know, right?
Yeah, that's it. 100%. So we took an RV trip, and I proposed out in like the Davis Mountains, in West Texas. But and at the time, oil was doing great. I kind of thought I might be like an expat for life or for a while, and then oil crashed, and we got sent back home after a year. And I was like, the last thing I fucking want to go do is like back to my Houston job in a cubicle, like not doing it, like I just, so I started, so we moved back, and I immediately started looking, and I took another oil and gas job, but it was like an outside sales. And the whole intention, this is like pre-kids, but the whole intention was like, I got to go find something that gives me a little bit of autonomy, a little bit of a freedom to go see, like maybe and I don't even know if I was thinking about real estate at the time, but just to give myself a chance to go do something else, give me some time. Because my very first job out of college was that, so I kind of knew the role and kind of the day-to-day stuff. So and I took that, and I actually met some friends who became friends who did real estate investing, and we were kind of both in the same spot of like, we want to do this, like how do we do it, let's just work together and figure it out, just like, so we started, this is like on the investing side, like not even, it's so funny how it ends up leading to what we're doing now with the lending, but so we started just like cold calling, pre-foreclosures.
Oh yeah.
Like
when was that?
Sub 2 deals. Like we just found like these lists, and
like how long ago was that?
This was 2016. Probably 2015, 2016,
right before Harvey hit, huh?
It was, probably. And so we were doing it together, and like he would take a list, I would take a list, and we would just like no idea
on the list.
We had no idea what we were doing.
Right.
We just wanted to do something, and we thought it was a great idea. And so that's, and I continued to work my job. I would go home, and I would
still in oil and gas.
And I'd go home, and I'd trap myself upstairs in one of the kids' bedrooms and like crank out calls for an hour. And so, it's sort of successful, I guess, it got me into the game, I guess, started, taught me the lingo and like how to structure deals and how to look at deals, like what is ARV, like just all the normal things that we know now, and so did that for a while, and then ended up, doing some of my own, basically just started getting into like some flips and rentals and kind of doing stuff on my own. And, kind of to fast forward is still doing my job, still doing this stuff, but then I started to pick up some projects on the investment side, and I wasn't focusing on my job too much, and so like that, so I end up getting fired, which I'll get into that in a second, which is a complete blessing in disguise for my oil and gas job, just because I wasn't doing it, rightfully so. But as I started to buy and meet lenders, one of the guys that I was talking to was kind of like, hey, and he was doing these DSCR loans. I was like, remember talking to him as I built a relationship with him after a while. I said, hey, you got a really cool thing. Like you just deal with investors and you do these loans. I was like, that's really cool, And again, this is, 7-8 years ago.
Right.
Not as well known as maybe what it is today. And he goes, well, I can get you a job, dude.
Yeah.
He was like, this private money, is kind of the Wild West. He's like, do you want to do this? I was like, of course. He was like, you don't have to go get a license. He's like, he's like, this is, full commission sales. Like, if you want to do it, you're not going to get a paycheck unless you close stuff, right? One of those things. And so I was like, hell yeah, I want to. Like, of course, like take on, like, I was like, open to anything sort of. Yeah. And so I started doing that. And so I guess I kind of got away from like trying to find my own deals, and I started to call, to pick up borrowers, from a lending perspective. So I did that for, I don't remember how long, but that's when I got fired from my oil and gas. but it wasn't, honestly, it really wasn't that stressful because probably wasn't a year, but it was long enough to know that I was comfortable with what I was starting to build in the lending, as like a loan originator. So I was continued to do, so then I was full-time. Then I went full-time lending as a loan originator, and basically, probably did that for a couple of years, and a headhunter on LinkedIn actually saw my profile, who was recruiting for Renovo, for Renovo Financial, and said, "Hey, here's all about the company. We're looking to start a Houston office. Are you interested in looking to have a conversation?" I was like, "Sure, of course." At the time, didn't ever, hear of the Renovo's name. We had just started a Dallas office about a year prior, so we were just entering the Texas market. From our headquarters is out of Chicago. But Renovo had been around for maybe 10 years at that time. They were very, very slow at their growth, very intentional. And so they were, we're headquarters out of Chicago, and we stayed there for probably, I think, the first 8 or 9 years and didn't leave that market. And so it was, looking back, it was really smart of them to say, we're going to master, this market, get the infrastructure set up, and then we'll look to expand. And so they came to Houston, or they, I don't know where they branched out to first, but they found, my boss, who opened up Dallas. And then he ran Dallas for a little while, and then he, started growing, open up the different markets in Houston, San Antonio, Austin,
Love it.
Another person in Dallas. And so, so this guy, he found me on LinkedIn and started that. And that was, I just hit 5 years at Renovo.
Nice.
Here in Houston. So
nice. Congrats.
So that's a little bit of that's a quick backstory from, from oil and gas to where I am now.
That's amazing. Dude, so someone found you on LinkedIn.
It's Lord works in mysterious ways.
Absolutely.
One of those things, you just and most of us would probably just ignore it, ignore the message, not thinking anything of it, and whatever made me at least reply back to him. I did, and just started the conversation, and that's amazing. It's kind of
you ended up being the guy for Renovo here in Houston now.
I mean, I am the only I'm the only person here. Like we've had a couple people here and there, but I was the first hire to open up Houston, and still here 5 years later.
That's amazing. And I think that's pretty incredible, Andrew, because it's just you out here, and you've been able to bring in $100 million worth of volume here in Houston. And of course, there's some leakage from other markets, right? Sometimes some other sales guys will, like you mentioned earlier, some other sales guys will be in Dallas and maybe close a deal in Houston, but I'm sure that happens. So only pretty rarely, I'd say.
Yeah, we kind of going back to how they started the company of, we have a big philosophy of local presence. The boots on the ground is what we kind of always say. And so I got hired to focus on Houston. This is my market. Go meet, clients, know them personally, walk the projects. So we are, it's sometimes, I guess, allowed to do some stuff in other territories. But it's kind of few and far between. It's like, they hire me to do Houston only. And so I mean, there's sometimes I've done stuff and even out of state, because the place I came from was nationwide lending. So I had some contacts, like Atlanta and South Carolina. And so I was, so every once in a while I'll still do some things, and some of the other guys will do stuff in my territory for sure. And that's fine. I mean, we have like a whole process of how that works.
Right.
But primarily it's definitely me, and it's kind of always been me.
Nice. Love that. What I really love about your company, Andrew, is that you guys have, just like the right people, just taking care of the entire process, the entire loan process, from the underwriting to the origination. Like you guys have now a servicing team, like everything's in house, right? And it just allows for things to just like flow quickly, easily. DSCR, I feel like it's not for the multifamily space. There's not a whole lot of DSCR lenders, right? I mean, I think you're probably like, one of the number one for that here in town. So I think that's really set you apart also. What would you say also is like setting you guys? I mean, you've grown exponentially right here in the last 5 years, and it's just you. So how do you think you had a part in that,
Well, it's a lot of things, right? I guess going back to your first comment of, we're very intentional about customer service. And so, there's no call centers. There's no like, who am I dealing with this time on my loan? It's like, it's always us. Yeah. It's always me and my team. It's always the same pod, of anything that we do, it always runs through us.
Yeah.
They get to know the borrowers well. Bars get to know my team well. Even though everything kind of goes through me, they know exactly how each person's role, what to expect, the processes, who steps when somebody exits, kind of like, as we get through the process. But it's really it's been a referral based business growth,
which is crazy.
It's just like,
yeah, it's crazy.
It's, my philosophy is like, do the best job you can with every single loan and hope maybe they go tell their friends,
right?
And the word, it was a very organic, kind of growth. And it's tough for a while, and it's still hard because there are a lot of DSCR lenders. There's not a lot of low, we're a little bit different in some ways, but there's still a lot of competition for sure.
Yeah.
And there's still a lot of people who don't know the Renovo name.
Yeah.
But it's been a slow growth, but kind of a very, like I said, organic and intentional growth of just like do as best as you can on every single loan, and try to make the loan structure and the experience as best as you can, with each borrower, and, see where it goes, like one at a time sort of thing, and there have been, and so that's kind of, that's how we've been able to build a business.
Can you tell me a little bit about like your team? You said like your team, right? So like you have do you still have Ashley?
Of course.
Yeah.
So everything starts with me as far as
walk us through like a loan process, right?
Yeah,
like,
I mean, so I'm the one who, again, I'm the only one in Houston. So like my team is, a couple are in Dallas, some are actually out of Chicago. So like, but everything starts with me as far as like, hey, I have this opportunity, whatever the loan type is, it all comes through me as far as like walking through, like, here's what it is, here's the purchase price, here's this or that, or here's like what I think it's going to appraise for the DSCR, here's the, just all of the details. And it's just, so I'll just go through and just make sure, and, and then part of that process is like, okay, what are you hoping for here?
Right. Understanding the goal.
Understanding the goal. That's It's like 100% what it is. And so like, understanding expectations. So like, I can either say this looks, I agree, this looks good. Or if it's, I also want to give a quick no and not waste anybody's time. Don't want to waste appraisal money. Like I'm absolutely will pass on a deal if I know the value's not going to hit, or if the DSCR is not going to work, or if there's something about it, I'll say, you know what, here's how it works with us, or, here's what the structure would be. And if it doesn't work, immediately pass them on.
Right.
And I always will give,
you have a network and everything.
Yeah.
Right? So
And I'll always will give recommendations of like, hey, here's somebody who I think would fit your box, and I always like, if I always put the customer, intentions first ahead of mine, because like, last thing I ever want to do is like cram something through, waste their time, and then call them up in 3 weeks like, hey, loan got denied, didn't work out, I'm sorry. And then they're pissed, and that's just not like, I'll never talk to that person again because they had such a bad experience. So, but it all, as far as the process, it all comes to me first, and basically just like walking through the opportunity, walking through the quote, giving them a breakdown of like, hey, if it does appraise here, if you do rent it out for this much, here's what it would look like. Factoring in, all the normal things. Like if we're talking DSCR, it's several different things that affect that structure and the rate and the cash flow and everything. It's, the credit score, the value, the debt, taxes, insurance, like all of the things that, will ultimately decide the cash flow. If everything looks good, and I have so many repeat borrowers who understand our process and understand the game really well too, to where it's like, it doesn't take a lot of education or like me walking through, like they know if it's a good deal or not. So like I don't always have to do that, but I always want to go through it just to make sure we're for sure on the same page. And like you said, understanding the expectations of what do you want and can I get you there? And it's either yes or no, and so
just to break it down again, right? Like your team, right? It's you, and then it goes to
so Ashley's absolutely. So Ashley's more of like, front end. If I send you a quote, everything looks great, I'll hit up Ashley like, hey, all right, LOI's ready to go. It's bars Josue, here's all of the details. Send him an LOI.
And so for people for people that are watching this right now, Andrew, maybe some of them haven't done a DSCR loan, right? Can you explain what an LOI is for them?
It basically letter of intent. So it's basically just kicking off the loan.
Right.
And so all it is just a quote,
right,
that we send through DocuSign, and you sign it. Like we agree to these soft terms. Like nothing's firm. We don't have the appraisal. We don't always have all the information, but like based on what we know and you're telling me and what we can see, here's what it looks like it's going to land at in the end. So we would start with a letter of intent, sign it, and that kind of puts the loan opportunity in our system to where we really start. So, that's the very first step. And then the appraisal, comes in. That's the very next thing we do is order the appraisal. Cause that's usually like the longest item that takes, it takes the longest in the whole process is getting that appraisal back. So I always would try to get at least appraisal ordered while we collect everything else and while we kind of, figure out everything else.
Yeah. I think it'd be really beneficial for every viewer to break down what the entire flow of the DSCR process, what it looks like, how it works, and maybe even go a little bit into like what DSCR actually means and how they qualify that number, how your underwriters actually look at a deal, what's important, what's not. I think that would be extremely valuable to anyone that's watching. But before we do that, let's go ahead and take a quick pause just to hear from our sponsors. If you're a nationwide real estate investor, you need to go check out GetHardMoney.com. GetHardMoney.com is the number one place to find local hard money lenders. You can connect with them directly. You can request term sheets. You can chat all in one single place. The coolest thing that I think about GetHardMoney.com is that you have free tools built in, AI comping. You have a flip profit calculator, cash to close calculator. What's really cool about it also is that it's 100% free. You don't have to go and buy anything. You can sign up. You can use all the tools that they have. They have tools added there all the time. No cost ever. So if you're investing and you need lender connections, this site works nationwide. If you need deal analysis, this thing is a no-brainer. There's no cost to sign up. It's just free value, free connections to any real estate lender out there. So go sign up, GetHardMoney.com. All right, and we're back, Andrew. So, dude, I think it would be extremely beneficial to all of the viewers at home, that have only heard about conventional loans, have only heard about, FHA, conventional VAs, all these different loan products are out there in the marketplace. But I think what really sets real estate investors apart is really understanding the DSCR process, right? Because a lot of people go into a property, they buy it with fix and flips, and then this is part of the BRRRR method, right? That a lot of people talk about: buy, renovate, refinance, rent, repeat, right? And you're sitting here in that process that's extremely valuable for any person that's wanting to invest in real estate. I think it'll be extremely beneficial to anyone that's watching to break down the entire DSCR process one step at a time, what that looks like. and more importantly, how you fit into the picture, Andrew, and then how you can make it a simple walk in the park so that anyone that's watching can come talk to you, and then they've already watched it. Now they can just start doing it with you. So step one, contact Andrew.
So step one would be, get with me, and we'll go through everything.
Through the deal.
And so just through the deals, and that's, the property type. Are we talking single family, duplex, 5+? I need to know almost all of the different details, because we offer it all.
Yeah.
But I just need to make sure I'm quoting it correctly.
Right.
And, I completely understand. So it's like, what's the address? How many units is it? What do you think it's going to appraise for?
Mm-hmm.
What is the debt? Do you have it rented? And if not, that's fine. But that then the conversation might go in a different direction. Or if you do have it rented, how much? And then I'll look up property taxes, and then we'll generally have to do like an estimate homeowner's insurance cost.
Right.
So we'll put all that together. What's your credit score? Because that plays a big part of it. And then after that, it's like, it goes back to, okay, what are you wanting here? Because we do, cash out refis, non-cash out refis, up to 75%. Some people like to go lower to get a better rate. But it's just like, understanding what they want, but then also just providing them with a lot of different options. So as we do that, typically on the phone, I'm plugging it in onto my side into our pricing calculator, Sizer.
Right.
And it's, I'm punching all of that data, and I'll say, okay, so based on, what we're doing right here, this is, you have these different options.
Mm-hmm.
You could, do this cash out, you could go lower and take maybe less cash out. And so that's just making sure, they completely understand, the process, the expectations. And if they don't, to maybe go a tad deeper of just like understanding what DSCR is, and because everybody kind of knows of the term, it's just debt coverage, DS, debt sales coverage ratio.
Yeah.
Debt service
coverage
coverage ratio.
Yeah.
I never
it's a tongue twister.
Well, I also never say it. I just say DSCR. I have to think about it.
Yeah.
All that is just how well does your property cash flow, and does it cash flow?
Right.
And so whenever we plug in, the loan amount,
mm-hmm.
and then we plug in, what's the rent, what's the taxes, what's the insurance, what's the difference? If the payment's going to be $1,500 a month, what is your lease amount? Is it $1,700? $2,000? That's your cash flow. That's the debt service part.
Yeah.
And so for us, we typically only need it to be cash flow positive. So theoretically, if our payment comes to be, after I plug it all in, $1,500, we kind of only need a lease agreement to show $1,501. Now that's shitty cash flow. It's not a good deal, but like we could technically get that deal closed.
That means that
because
your debt service the ratio could just be one.
Just one. Yeah. We only require one.
1.01, I guess.
Yeah. Right. 1.0. Yeah. And so that by our guidelines is a pass. That's all we technically need.
Yeah.
We do give incentives, like, you do get a rate decrease,
mm-hmm.
the better the DSCR is. Like if you're able to hit a 1.2,
yeah,
it drops typically pretty significantly, about maybe a quarter of a point.
In
that same structure. It could be same LTV. But since it's, since you were able to basically find such a good deal with strong cash flow, we reward you with a better interest rate,
lower rate. Yeah.
So, but to just get a pass, some people, a lot of borrowers will say, I want max cash out. I want to take that cash. I want to go buy more properties. I want to do these other things. If this cash flow is not so great,
yeah,
that's fine. And people can make sense of that, because they're going to take the cash, and then they're betting on the appreciation over the long term, which isn't a bad strategy. It just doesn't have the cash flow.
I think what's really impactful here also, Andrew, is the fact that DSCR loans are completely independent from your own personal finances, mm-hmm. where conventional loans, FHA loans, mm-hmm. the typical loans that every person in America uses, right? That you have to go through a qualification process of your last 2 years tax returns. You have to show your bank statements. You have to make sure that the underwriters on the conventional side are more worried about your own personal financing, mm-hmm. versus here a DSCR loan is a loan that's completely independent of your own personal finances. And what you guys really care about is this property going to be able to pay the bills every single month for the next 30 years? Right.
Exactly. And, probably the best way to maybe think about it is we're underwriting the asset, not so much the individual. So a lot of people, understand the conventional FHA, VA, all the different types of loans, and be honest, it's the same structure.
Yeah.
It's different underwriting, and we'll get to that in a second. But like if somebody's new to investing, new to DSCR, but they own their own home and they went through that conventional process, our loans, these are the same thing. It's at 30 years, fully fixed, fully amortized, and includes escrows. Like there's really no different from a high level, structure point. This is what it is.
Yeah.
The difference is, one of the differences is just the qualification process, like you said. And so this is, in this private money space, and this isn't unique to Renovo. This is pretty standard across the board, but
Correct.
it's a much quicker process. These things take 3 or 4 weeks to close, but we don't do the tax returns. We don't do the W-2 income verification, DTI. We don't,
you guys don't
we don't look into all that,
Right.
So it's basically we do look at credit score.
You look cash on the account.
Yeah. And so it's like the 3 biggest things that we kind of always say is like credit, liquidity, experience. So if you have a good credit, you don't even have to have a good credit, but it kind of determines some of the final terms. Like if we're talking DSCR, we can get a loan approved at a 680 credit score. Now it's not as great of a structure if you have a 780,
right.
And so like the more qualified, I guess you are, the better score, you get better terms for sure.
Right.
But we can actually do it just kind of like the 1.0, like we can do it. It's not as pretty as something that has a 1.2. And so, but the structure is the same. The process is just much easier and quicker.
Right.
And some people, some people will still, if there are some borrowers who will buy rentals and go conventional because they traditionally do have the rates are actually pretty similar these days, at the March of 2026, like they're pretty similar, to be honest. Like we might be slightly higher, but some borrowers will, if they're bankable and qualified and they're willing to go through the process, going through that, they can make sense of that because they're okay with the million questions and verifying this and that. Like, what is that deposit? Give me your tax returns. Like some people are willing to do that. Like, that's great. If you're willing to do that, man, like you will get a lower rate.
Right.
And so some people choose to do that. Some people would rather just, I have this hard money loan. I need to get out of it. I need to get him paid off. I need to get this, rented out and into a long-term note so that I can keep going. So I can really scale. And, most people don't want to spend the time of dealing with a conventional loan, one at a time.
And I think you really hit the nail on the head right there, because for a lot of people, speed is everything, right? And in order to scale quickly in real estate, you need to have speed and convenience, right? Like how can I get out of this fix and flip as quickly as possible so that I can move on to the next project, right? So I think that's where you can come in. Another thing is that there's no limit to how many loans you can do with Renovo, right?
Well, that's definitely the case when you look at it compared to like a conventional, for sure. I think FHA is, I think it's 10.
Yeah, it's 10.
I think it's 10, right? Is that still the case? So,
right.
So I don't want to say, we have an unlimited bank, credit to each person, but like for sure, like
you can do a lot more.
Dude, like if you are flipping 5 properties right now, and you want to rent them all out, give me all 5 at one time, and let's refi them, and then
no problem.
And you call me in the next week, I got 5 more. Let's do it. And so like it, by and large, no, it's not an issue. When we get to like a certain, it's typically, we have these exposure limits. It's not even, I mean, it's kind of is limits, but like we have these exposure, like if you get to about $8 million, it's not a cutoff. It's just like, hey, do we understand Josue's business? He's at $8 million. It's just kind of like a review. Like we gotta let me out to this guy.
Yeah.
Are we comfortable? Can we verify that the rents are coming in?
Yeah.
How much liquidity do you have? So it's definitely not a cutoff. It's just like a review process. And we say, okay,
you look good.
You look good. There's nothing wrong. No missed payments. Everything's good. You got liquidity. Like we love everything you see.
Yeah.
Let's go knock out another $4 million.
Yeah.
And then when we get to 12 million, we'll have the same exact process.
Right.
I mean, there are times like, I mean, we have mutual friends who, do a lot of buy and hold, and, you get up to about 20 million. It's kind of a different story, like we might, there's a chance where like, we just can't, lend to you, and
it's a lot of exposure,
unlimited, but that's a big number, that's a
huge number,
and that takes a long time to generally get there.
Right.
But that's very few and far between, because by the time you get to that number, some of those, the initial loans are from years ago, and you're probably going to end up paying those off or selling them to open up some credit back with us, so
it kind of works out.
It's a great problem to have, at least for me, for me it is, so like, being able to lend, because like you get to that point, like you're a strong tier 1 type of borrower who,
absolutely,
that we just love, so.
Absolutely. Back to the steps. Step 1, we spoke about gathering, gathering the info, underwriting it, making sure it cash flows, understanding the rates, all of that. That's all step 1, right? That's done. Like someone calls you up, yo, Andrew, I got, this rental property that I'm going to keep, blah, blah, blah. I already have it leased out, I'm ready to go. Boom, sends it to you. You gather all this info. Then you send them the LOI. Is that the next step?
That's right. Yeah. So it goes, as long as we're on the same page with what the loan might look like.
Yeah.
Next step is LOI. And that really kicks off the loan in our system to order the appraisal.
Yeah.
The appraisal typically takes, we have a local, I would say like, what is, some of the benefits, and, one of the things that's always at the top of the list is we have our own appraiser.
Yeah.
Melanie, she's amazing. She's been great for us, great for our business. Like, the clients know her. She lives in Katy, very local, go directly to her, no AMC, no third party, like none of that stuff.
Right.
But we basically will get this LOI signed and get the appraisal order over to Melanie. And that's
and Melanie's here in
Houston. Melanie out of Katy. Yeah. I mean, she's local, and she has a team, and it's a quick turnaround.
And she works directly for Renovo also.
She's not a Renovo employee, but she's set up with us. We send her all of our DSCR, she's our DSCR lender on that side. And so it'll go to her, and she'll usually have them knocked out. Like, there's almost never, if it's maybe Galveston, it's kind of a little bit of a drive. Like maybe it'll take 2 weeks, maybe 10 days, but like it's generally a week turnaround.
Right.
But while we order that, the biggest thing for me as far as the speed part is getting that appraisal to her, because that's what takes the longest. Once we send that appraisal order, then it's collecting the docs. So it's, send me your LLC docs if we don't have it already. Send me your lease agreement if it's leased out. Give me your insurance contact. Give me your title contact. Typically we'll need the original purchase HUD for like whenever you bought the home with the hard money lender. We'll need that depending on like when you bought it. But, and then the financial part of our process is needing 2 bank statements from your accounts. And so, like I said, there's no W-2, there's no tax returns, but we do need to see your bank statements just to verify your available balance, essentially. We have, different metrics as far as like, how much do I need to show? That's generally one of the questions up front, is like, how, besides all the terms, like, how do I make sure that this is approved? And it's, and part of that is how much cash you have.
Right.
How much are you able to show on your, on your balance?
What do you guys typically require? Like 10% of the loan in your bank account?
Well, it's kind of depends. It kind of depends on how many, because one of the things that our committee, when reviewing and approving the loans, will factor in is how many loans have we closed with you? So if you send me a, $200,000 loan, for that loan only, you probably only need like 10 or 20,000 bucks, like not much. Like I'll generally say, if you have a year's worth of mortgage payments, so if it's 2,000 bucks, if you $2,000 a month, you can show 24,000 in your account, we're good.
Yeah.
But if you send me that same $200,000 loan, but you got 5 million bucks out with us in exposure, like that number's going to need to be a lot bigger, so it's kind of, it's case by case. It's not case by case, but it kind of depends on, there's not like an exact number that I could say, it kind of like, look at it from like the big picture of like what you have out. Or how many other loans do you have out too? So, but so that would be, I think I said everything else. So that would be the other documents that we would collect while that appraisal is being ordered, because the goal is to get that appraisal and have everything else. And as soon as we get that appraisal in, we're jumping back on the phone and we're going over the numbers again. So now we have firm numbers instead of, hypotheticals, on the initial phone call. It's just like, I think it's going to appraise for this, or now we have an appraisal in hand. And so we have hard numbers. And there's sometimes we need to go, fight the appraisal. Like we want a little bit more and dispute it, which we can always do, but 99 times out of 100, like we get the appraisal that we're looking for, so we usually don't have to do that, but it's always an option if you were just not where we need to be.
Right. And I think having that appraisal in-house and you guys having a relationship with them, I think that probably helps.
It's a game changer, bro. Like it's I was talking to somebody today and they use these other, our competitors, nationwide lenders, and they always have to go through these third parties. And it's just not, it's not fair, because, they have a lot of, there's a lot, I don't know, but I don't know if it's like strings attached, but they're just conservative, they're very conservative. They're not open. It's just a lot, you're more likely to hit the true value. You're able to talk. If you're able to go talk to Melanie, like, hey, here's why I think it's this value. Here's what I did. Here are the comps that I pulled. Can you please at least review these and consider them when you're writing this report? Yeah. And
that's going to go a long way.
It does,
in making sure that you get the value that you needed.
And she's a licensed, she can't make stuff up, so it's all stuff that she has to be able to justify, but it's just, she's willing to try to get to where the borrower, the client is needing to be. And there's plenty, and if she doesn't, it's like, hey, Josue, I'm really sorry. Here's where I'm at. Yeah. I know it's not as high as you want it, but here's why. Right. Here's what I'm seeing.
At least there's an understanding.
Yeah. And so it's like, so you're typically never going to think it's unfair, because she'll absolutely walk you through what she's seeing. Yeah. But it's also like, prove me wrong. Right. And if you can, like, she's always receptive to it.
And I think Andrew, and like, it's really important. I want to point this out, especially being in Houston with us not having any zoning here. Dude, sometimes like I've done a deal with you guys where it's like in Angleton, right? And it's a single family house, but I have an extra lot attached to it, and there's nothing else quite like it, right? So we have to appraise it and look at it a little bit differently. Like, what is the single family home appraised for? And then what is the extra lot? How much extra value is that bringing into the table, right? And I think you guys did a great job and like got me to the appraisal that we needed to be at.
I remember talking to you about that deal. I feel like it was a couple of summers ago, but I wouldn't have thought about this unless you brought up that example. But another benefit of having a direct contact, I guess, with the appraiser is, not too often. She doesn't love when we do this, to be honest, but like if we have a unique deal and it's like, man, I don't know what this sucker's going to appraise for, it's just like, it's awkward. It's land next door. It's a big lot, whatever it is. I'm like, you know what, man? Like, I don't want to risk this. Yeah. I don't want you to pay for this appraisal and wait, and we're killing time. Let me send an email. Let me put this in front of her and send me some pictures, give me some details, and have her review it up front and see where she might come back at. Let's see if she can give us an idea of where it's going to be. Like, it's not exact, but like, at least like pitching it to her, so because she might, you might say, hey, I think it's worth $300K. And she's like, Andrew, like, based on what I'm seeing, like, I can't get there. Like, I'm going to disappoint you. I'm not going to be able to get there. I'm gonna tell you right now. And that has happened for sure. Yeah. And that sucks, it does suck. But then I go back to you, I'm like, hey man, like, I'm not even going to try to get this started. Like, this is what it's probably going to come back at. Like, right. Let's not even attempt to do this, because you're just going to be disappointed. You're going to waste your money and your time. And, and so like, that's another benefit of that. But to, I guess, to go back to the question, as far as like the process and how this works is, so our goal on the team is collecting all those docs that I mentioned. And as soon as we have that appraisal back, we're immediately jumping on a phone and like going over the hard numbers of like, okay, where do you want this to be now? Like we have the numbers, like make a final decision and here are all your options. Let's go through this. Here's the final rate, you know, everything that's important to you. And I'll again update the quote of like showing, you know, people want to see it.
Right.
See
the final numbers.
See the cash flow. Like our quote gives everything that you care about as far as like loan amount and the rate and the cash flow and the, you know, we do have a prepayment, you know, penalty. So like everything that loan encompasses is on that quote. So you can see, and if it looks good, we're immediately going to underwriting. You know, I'll get with, so the middle person, you know, so that you mentioned Ashley is like up front. Once she collects all the docs, it gets handed off to my credit analyst.
Yeah.
Brett, who's a rock star. Brett will then step in and say, okay, I got this full file, got the appraisal. Let's go get this closed. And so he'll step in and underwrite the deal, put a whole summary together of the property, the borrower, the cash flow, like all of the details. It's a pretty, you know, it's a pretty thorough summary that and then that's what gets sent off to our loan committee department that actually approves the loan. And they're based out of Chicago. So so Brett will put that together, send it off to loan committee, and say, hey, got this opportunity. Here it is. Here's all the details. Here's the appraisal. Here's the summary. You know, give us the approval or, you know, give us your feedback. And sometimes they'll come back with questions.
Yeah.
Sometimes easy questions, sometimes hard questions. You know, sometimes they see stuff that Brett doesn't. You know, their job is to protect the company.
Right.
You know, everybody wants to close loans, of course, but we also want to close, you know, good loans.
Right.
You know, we have a very low default rate.
Really?
Which is super low. Like one of the lowest, like honestly, like one of the lowest in the whole private money space. But it's because, you know, we look through things, you know, we're pretty smart, you know, so we'll send it off to the loan committee. As soon as we get the approval, then it goes to Brett. Then Brett steps out of the picture. He did his job. And then Lauren Lewis is my closer, and she'll communicate with title, communicate with the insurance agent, do loan docs, communicate with the borrower as far as when's closing is going to be, schedule that, answer any closing questions, escrow questions, any of that stuff. And so that's the third person, like on the pod, on my team, that will help coordinate and close the deal. So, my job is to, bring in new loans. It's basically sales, it really is.
Right.
But like through all of that, it's all, I'm always involved. I'm always copied on the emails. I'm always like, hey, when's this appraisal going to come in? Yeah. I'm always tracking it. I'm always available. Like, hey, here's where we're at. Here's what I think we're going to close. Yeah. Here's anything. Yeah. Here's a new insurance contact. If you need help, you're trying to get quotes, like anything it is. Like I'm always there, but these other people kind of like doing some of the finer details, I guess, of the process.
So just to recap, and I think this is extremely valuable, Andrew, especially for someone that's never even heard of DSCR. I think this is going to offer a ton of information for them to really wrap their heads around what all of this process actually means and what it's meant to do, right? Because I feel like in order to do anything in real estate, I think it always starts with education, right? Understanding the process. So then with understanding, then comes familiarity, and then comes confidence, right? And I think this is very important. So I'm just going to recap everything, and if I miss anything, just make sure you stop me. Step one, gather info, right? You guys are gathering all the info, getting everything ready, underwriting DSCR. Then step two, send the LOI, right? Step three, appraisal. Step four, docs. Step five, final numbers. Step six, underwriting with Brett. Step seven, loan committee in Chicago. And step eight, close it out.
Close that sucker. Let's
go.
It. Yeah. That's it. Yeah.
That's it. I mean,
it's simple. Yeah. It's very, and the first loan might be, I don't know if it's intimidating is the right word, but like, you don't always know. But like once you do it a couple times with me, like you understand the process, you don't understand who's involved. Like it's so much, not that the first loan is ever difficult, but it's kind of understanding the process and the ways and like what we look at, what we need. But once you do a couple, it's like, all right, I know exactly what you need. It's like clockwork, like with the same process with the same people every single time.
Right. And man, this is really great, dude. Thank you so much for sharing everything. Let's take a quick commercial break and we'll be back here in a second. If you're a real estate investor in Texas, Natalie Basak with Black Label Title is the #1 title company for real estate investors. Here's why. Natalie can pull free instant property reports for existing clients that show liens, nearby foreclosures, any delinquent taxes. This is so that investors can do their due diligence before going under contract. I'm sure she could even help you out if you need to do some sort of due diligence. If you're going to go buy at the auction, Natalie Basak is the #1 person for you. They are backed by multiple underwriters, so they have different people that can make sure that your deal gets closed. And I think what's really cool about them is that they do pass through A to B closings. This means that you don't need transactional funding. This alone saves you several $1,000s on every closing that you do. That is a double closing. So that means that you can use the B to C transaction to be able to fund the A to B. No transactional funding needed. They're familiar with all investor transactions, from assignments, double closes, novations, sub-2s, wraps, anything that's creative. Reach out to Natalie Basak. Her phone number is 936-442-8486. Natalie Basak with Black Label Title. All right, and we're back. So, awesome, man. I think we just went over the 8 steps to getting a DSCR loan closed. Super valuable information, just to let people see the behind the scenes, right, of what it takes to do a DSCR loan. Let's move on now and kind of have a full circle moment. What happens after a loan gets actually closed, right? And we're talking about servicing the loan, right? You guys do servicing in-house, which I think is fantastic. Go ahead and talk about that.
We do. We have our own. It's a completely separate department, but it's a Renovo servicing group. So we don't, and it's something that I'll mention. If I'm talking to somebody for the first time, it's like, what are the benefits? Why should I go with you? Sort of thing. I'll rattle off the fewer higher level, things that I think is important, or the feedback that I get. And servicing, like, you don't think much of it, to be honest, most of the time, especially if you're newer, but having a pain in the ass servicing company, like, I don't want to throw out any names, but like a lot of, there are a lot of bad servicing companies.
There's a lot.
Getting a hold of, getting anything you need, statements, payoffs, bank statement changes, all that stuff. It's a process. And so, we have our own, our boy Chacon is frustrated with us right now. It's funny. Like as soon as I think of servicing, I think of him, because he has so many loans and he's trying to get some stuff in. But I'm like, dude, you got like a lot of loans, man. It's hard to get through. But we have a dedicated Texas servicing group. For only the Texas loans, because we've kind of grown into a bigger company nationwide. And so a year or so ago, we created a Texas only servicing group. So we go to the same contact for anything that we need. And we also have a portal, like as soon as one of the requirements that we have before you close is go in and we'll send you your portal, login, user information stuff, get you set up. So you go in and you can see anything, you can request a payoff. A lot of the things you can just do through our portal.
Right.
And actually this hasn't been released yet, and I don't know when, other than we were told it's going to be this year. So we're going to have an app. We're going to create like a Renovo app, which is supposed to be pretty sweet, apparently. Like you can go through and be able to do all that just from your phone. So the our portal, probably like most, but you can go in and just see everything you need to see. But outside of that, if you have, specific questions, I feel like the questions are mainly around insurance and escrows, especially on like the term, this DSCR side of just like insurance, updating insurance, or like it lapsed into like, we're needing to make sure it gets covered, so we don't do like a forced place thing. So
not only that, but what's a document that you need from your, from the servicing company to do your taxes for?
The 1099.
To know how much you pay
interest,
in taxes.
I feel like that's on the portal.
Okay.
And the only reason I say it is because I don't get asked about that much.
Yeah.
And that's, everybody needs that, right?
Right.
So like that has to be something that is accessible through that portal. But yeah, but I guess the point is like everything is Renovo, you know, like from beginning to end, you know, so, you know, I'll talk to borrowers who closed loans years ago and I'm still the contact.
Yeah.
You know, like I'll, you know, like a lot of that stuff I generally can't answer. I just have to connect them.
Yeah.
But it'll always go through me and not some, you know, right, you know, because a lot of times loans will get sold off, and you don't even know who holds it, you know. And it's just always us, and so and we've actually been, you know, it's really another income stream for the company, to be honest. You know, I mean, it was really smart for them to set it up, but we have actually are servicing loans for other lenders, like for our competitors.
Really?
Yeah. And so we service their loans for, you name it, you know, like I don't know if there's like some specific, you know, lenders who we do it for, or if, you know, how it works, but we service a bunch of loans, and they're not all loans that we originated.
Yeah.
But yeah, I mean, just anything that post close that you need will just always go through us, which it's not always a big deal.
Yeah.
You know, it's not like a big selling point, but it's just a convenience thing.
It is,
you know, it's just a convenience thing.
Yeah, it makes it super easy to work with.
Yeah,
you guys.
it's just
like
one other thing that, you know, that we
thing.
can kind of offer that, you know, it's kind of nice, you know.
I love it.
So
switching gears here a little bit, man. You know, we've talked a lot about the DSCR. Let's talk about 5+, you know, like multifamily complexes. Quick question before we jump into that, and then I'll ask you specifically about what the process looks like. You know, is there anything that differs from a single family to a multifamily? But I have a quick question. What's the biggest multifamily complex that you've done a DSCR for?
It is a one that I'm closing next week.
Yeah.
To be honest.
Oh yeah.
So I'm closing a 74 unit right now.
Nice.
I've done a couple of years ago. I did 169, but it was comprised of like, I don't even, like 20 different properties. There's like
it's like a portfolio,
duplexes over here and triplexes and some 10 unit, you know, but like, so it was a bunch of different random properties all under one big portfolio loan. But as far as, you know, like a true, you know, commercial apartment style, it's the one I'm actually currently doing, 74 units right now. So yeah, so that's you know, it's not that different. Like we've talked about the DSCR, you know, so the biggest difference really is that we can go 75% on the 5+, cash out, 75% loan to value, cash out, non-cash out, all that stuff. It's really a lot of the same structure. The only big difference is on the 5+ requires, I guess, first of all, a commercial appraisal. So the appraisal process is a little bit different. It takes a tad longer, a little bit more expensive. But the DSCR requirements on those is 1.2. So we talked about the 1.0, like just passing on the single family, or 1 to 4.
Yeah.
Their commercial is we're a little bit stricter, basically.
Yeah.
Like we have to have stronger cash flow.
Right.
Which generally isn't that difficult, because when you have a bunch of units, a bunch of income, like it's generally pretty strong, you know, so it's not always that difficult to hit that 1.2.
Right.
But that is a cap. And so if you know, so say if you know, in every other metrics, you qualify for 75% great credit, liquidity, like all of these things, but the DSCR is at 75% LTV is like a 1.17 or whatever it is. In that scenario, we would have to drop the loan to a 73, 72, whatever it is, to hit that 1.2. So that's really the big difference. But yeah, we absolutely, you know, I'm doing, you know, you had Richard Marquez on here a couple months ago, whatever, like closing an 8 unit for him next week.
Nice.
You know, those, we 100% have those. I mean, that's one thing for sure that a lot of lenders don't have is, or they'll have a cap on like 8 or 9 or 10 units. You know, they can only go up to so far,
and you can do
so many
74.
units. So there has been, I mean, to be completely transparent, there has been some changes in that product type. Like it actually did very temporarily actually went away. Like it got suspended for like a week or 2 weeks. So while like, cause the market's like right now, again, end of March, market's kind of crazy, dude. It's like volatile, like the treasuries are kind of going, up and down. And so there's a little bit of uncertainty like with the investors and, kind of all that. And so, we brought back, the 5+ loan. So we have it. But it's a lot of it's the same 30 years, fully fixed, fully amortized, includes escrows. It's not that much different.
Yeah.
So yeah, I mean,
awesome.
but yeah, I mean, that's one thing, those loans are kind of few and far between for sure. Like I don't do a ton of those, we do a lot more single family type of stuff.
But you guys can do them.
We 100% can do them
for sure.
We have, again, on that side, we use Ambrose Group for the appraisal.
Nice.
Brian Burke over there, he's equally as awesome as Melanie. And so we go through him, for all the commercial stuff. Like I said, those will take, another week or so to get closed. It's going to be bigger loans.
Right.
But the underwriting's still the same,
right.
It's a lot of the same metrics, so we don't require anything extra on those loans.
Mm-hmm.
I mean, sometimes we'll say like, do you have a P&L?
Yeah.
Rent roll, some things, but like we don't do the tax returns, like still simple underwriting.
Cool. The last thing that I want to touch base on is, we've talked a lot about DSCR, and I, probably this entire podcast was about that, but that's not all you do. You do fix and flips also, and new construction. Specifically, you do it for a really good friend of mine now, Justin Davis, who, shout out Justin Davis. I know he watches the podcast, so shout out, bro. Love that guy to death. He's come on the podcast and just offered a ton of value when it comes to new construction and mindset and just overcoming a lot of things. So talk a little bit about that.
We do. It's funny because I'll do some DSCR. I'll know clients pretty well. Yeah. And this is my own fault. Yeah. But it's like, oh, you do hard money? It's kind of like, we didn't know that because like you're like, we're so kind of known as the DSCR, which isn't always a bad thing. But yeah, we do the front end, like the short-term loans. Yeah. So fix and flip. We also do 5+ there, 5+ units, but 1 to 4 fix and flip, new construction. Yeah. We have all of those different product types, and we actually have, and we do more DSCR to be open. We do more DSCR, at least in Houston. Some markets have more bridge, hard money loans, bridge loans. Mm-hmm. There's a lot of money here is what it really comes down to, is like, there's a lot of money, private money here. Yeah. A lot of small hard money lenders that, that it might be a better offering that we can do, to be honest, and so, and that's fine, and so like, I'll quote hard money all the time. And, if we're not, whether it's, we require a little bit more of a down payment than they're wanting, or whatever the case is, I'm like, hey, I get it. I would do the same thing if I was you. Every investor wants to keep their money in their pocket, so you can build and scale and do all that stuff. And I'll absolutely say, here's James, here's all of these, I know a lot of people, so I'll absolutely put them in contact, right? Just to help them get the deal closed. But we do offer, we have this thing called the loyalty program, to where if you're looking to buy, a fixture upper, basically you want to bring us the hard money loan, but you also want to hold on to it. We'll transition it into the DSCR. And so we'll keep everything in house, and we will, we discount that back end interest rate on the 30-year loan. So we try to make it, entice you a little bit to keep it with us, do it with us on the front end, keep it with us on the back end. We get, we get both sides of it. And so we offer a little incentive there.
Nice.
To do that. And then the new construction. Yeah.
Do a lot of deals with Justin?
No, to be honest,
no.
So I know Justin because our kids go to the same school.
No kidding.
And so his son,
Second Baptist. Your kids go to Second Baptist. Oh, that's awesome, dude.
They do the university classical education stuff. So his son and my son are best friends.
Okay.
They've been best friends for like a couple years before Justin and I really knew each other that well. It's funny that we would say what's up to each other, like baseball games and stuff like that or whatever. And we just started talking, I don't know, a year and a half-ish ago at a baseball game. And it's, dude, it's like, what do you do? Like, what do you do?
Yeah.
And then it's like, where'd you go to school? Sam Houston.
Yeah.
What'd you do before? Oil and gas. So it's like, bro, it was like the easiest friendship ever.
Yeah.
And so, but we actually know each other through school, and then it's just grown tighter, like, him introducing me to people, doing the same, talking about stuff, like, it's just, I mean, so
it's amazing.
It's actually way more of a friendship, like a genuine friendship, than it is like a business relationship.
For sure.
So
gotcha. It's amazing, man.
Yeah. So
great
but we do
story.
new construction stuff too. Just to throw it out there, I guess.
For sure.
Yeah. So.
Nice. Well, Andrew, I think we've gone through a lot, man. I think this is going to really break down a lot of things for a lot of new people. So thank you so much for coming on here. For anyone that's watching right now, they're probably going to want to, if they've made it this far, they're probably going to want your contact, right, to be able to do business with you. Yeah. So what's the best way to contact you, bro?
By phone. I keep telling myself I'm going to step my Facebook game up, but it's just not my personality. So like, I am on Facebook for sure. Like, you can find me on Facebook. Yeah. Hit me up there. But probably either, Andrew at renovofinancial.com email, or just my text, call me. I'm always working. Cool. Always got my phone on me, but it's 210-425-2190. That's my cell phone. Yeah.
Cool. Yeah. Cool. Awesome, man. Well, thank you so much for being here, and thank you for breaking it all down, dude. It was a long time coming, so I'm glad you finally made it out of here.
Yeah. Thanks for having me, man. Thank you. Thank you so much.
Yes, sir.